is up, YouTube? I think we're all good to go. Got the mic, got the better sound quality. Let me lower it a bit so I stay in the green. Testing, testing, testing. Okay, perfect. So, kind of a pretty calm day. I took a trade in the morning and on Euro, as you can see right in front of me, and that's it. Did not take anything else today. But I want to go over two trades, one on Solana, which was an absolute banger. But first, let's get into Euro. Okay. So, general overview on Euro is, as I described on Monday, we still have that weekly candle formation where in the beginning of the week we were bearish because this candle had no wick to the downside, and we just put in that wick to the downside, and now we're going up, and potentially we are going to close the candle or the week green or in light blue in my case. So following main market structure, primary like 6 to 8 hour, we still have down, up, down. This is where we got our break for a higher low, and then this whole move is just one higher high, and this can just easily be a pullback for the higher low and the higher high on the 8 hour time frame. However, if you switch over to the 4, this actually is valid market structure, and you do got yourself a 4 hour bearish break. But the 6 to 8 hour overrules the 4 hour, so a higher low was very possible and it was on the table. So we actually bounced from this very, very clean looking demand chain. You have a 1 hour order block with imbalance that created the second 1 hour order block with imbalance that created the third 1 hour order block with imbalance. And it's very clean looking, and we had a perfect bounce from there, and then we went up, right? Drawing two is a bit laggy, but from there we just went up. It is for a demand chain that after demand chain has these perfect mitigations, it obviously turns into liquidity. Because if you start losing this low now, there's no demand to hold price up because it's mitigated here. So then it just turns into liquidity. So we went up, and I had this POI here. I don't remember which zone it was. Maybe like a 30-minute or a 15-minute. What was the zone I got there? Let me see. Can't remember now. It's a 10-minute one. Hmm. Well, it's definitely a 10-minute block, that's for sure, right? Where it swept liquidity here on the left. So it swept liquidity and then it broke structure. So there's definitely some sell involvement there. I don't know why I had it like that before. Let's keep it like this now. And so we had this 10-minute block, and guess what? We came up, formed a nice high, and had a pretty aggressive move down from that 10-minute block. 10-minute block, create this 10-minute block, aka supply chain. What do I always tell you guys about the second tap of a clean looking supply chain? It is very effective. Same way on the 1 hour, we had that 1 hour order block with imbalance right here. This 1 hour order block created this 1 hour order block. Look at the tap from that second create order block. Boom, massive move up, right? And on the 10-minute, if it looks that clean, it's also very, very effective. I'm not saying to trade the reaction, but you can expect the reaction there. This 10-minute one created that 10-minute one. This is the second tap. So we went up. I was just following local market structure. So I knew that we had multiple scenarios. This being a higher low on the 8 hour, or potentially a lower high right here on the 4 hour. Local market structure will determine that. Okay, if you break local market structure from the low up, a lower high is most likely. If you don't break the market structure from the low up, a higher high is more likely. And our market structure was simply looking like this, you know? From the low up, we had a high, higher low, higher high. So this was our simple market structure, and then we came down and we formed a very tight range. So I put this as my whole range, which is the valid way to do it, right here. Put this as my whole range, and then you can immediately see something that's like it just stands out if this is your total range, especially if you look at it from this moment in time. This is your range, but all the price action is in the upper section of the range, indicating a imbalanced range. And if you don't see it with your own eyes, you can always use the volume area tool, because the volume area low is at the EQ, indicating that there is no volume in the upper or in the lower section of this range. So we had an imbalanced range, and then had a range within the range, which we always have, you know. That's nothing new. So following this internal pool, we had up, down, and then this was your very tight range right here. Boom. So if you look at it, this range started at 10:50/11 p.m., which is like after hours, and then the whole Asia session took place. Yeah, so the whole Asia session took place within this range. And I don't really use like session highs and session lows, but I do use liquidity points. And it's always extra nice if a liquidity point lines up with it being an Asia session high or an Asia session low or a London session high, low, whatsoever, right? So I really like that Asia just had a very tight range. Because then what can happen? Well, maybe London opens, we sweep the high, we sweep the low, and we reverse, right? So what happened here is we had our range high, we had our range high, we had our initial range low. We already had a sweep of the range low. Okay? We broke local market structure from the top down. We got the retest, and then we went higher up towards the range high. Right here, we got our sweep of the range high at 8, around 8:30, which price likes to do. Price likes to start moving an hour before market opens, or London Open, or even New York Open. That's also those kill zones, you know, an hour before and then a few hours after the market opens. Those are the best times to trade. But then we went up, we came down. I didn't see anything really significant. If you go on the 1 minute, you do have a structure break. Um, so if you already wanted to trade this, let me see what the volume area was doing. Yeah, so you could have already traded this 1 minute market structure break. Let me get rid of the developing ones so it's not as messy. So what you could have done is here we already had our sweep of the high. We had our break back inside right here, indicating that you could have a range rotation. It doesn't have to go to the other extreme point because you're not backed by Wyckoff yet. But right here, you have your break, and then you come back inside the volume area. You get that retest into range supply and the volume area high. Let me check what the risk to reward was on a trade like this. So not the best. It's a 1.7, right? So not that significant. But let's say you did take this trade, which is valid. Not backed by Wyckoff yet because you're trading the second tap, right? You're trading the second tap. So you cannot really aim for the low, and you really have to manage your trade. Because what happened is if we follow this 1 minute pool, price made a higher low for a higher high. Then we broke structure right here, and then we created a lower high for a lower low, lower high for a lower low, and then we broke back to bullish. So if your entry was right here, yeah, and you see this candle break back to bullish, that's your time to de-risk yourself. Put your stop loss to entry and let yourself get stopped out, right? Not losing any money. So you could have traded this retest on the break, kind of the same price point. But the moment you see this market structure break back to bullish after sweeping some liquidity, that's your sign to get out. London opens around here. London opens, and we have that move back up. Well, let's extend our range high to the next deviation. Let's put the EQ in right there. And now we swept the high once again. And looking at it from a timing perspective, which I don't really emphasize on this channel because I don't use it that often, but it is nice to see because we do use market maker involvement, right? So it is kind of nice that pre-London we already took that high, took that Asia liquidity, we came down, London opens, we sweep the high once again, clearly indicating people filling their short positions, and then we break structure and we go back down. So for to trade a model on Wyckoff distribution, which did ended up happening, you need to break structure from the low up from between the second and the third tab. So this is the second tab, this is the third tab, this is the low. So break mark structure from the low up, which would be high, higher low, higher high. So if we break this line, which lines up with the equilibrium of the range, that's kind of confirming that this is going to be a model 1 distribution, and then we can short towards the local range, so which is the technical target, right? There was one problem here. Um, there was one problem, and that's that the risk to reward was just not worth it. So if you entered here, there was no internal market structure from the top down to give you like a tighter stop. No, you really had to put your stop loss above that high, and then you really had to target that low, right? Which is a zero point 0.9 risk to reward, which is terrible. Okay, we aim for two plus minimum, but I still took it. Why did I take it? Well, I was really convinced if I also extend my value area right here, I just knew the moment we broke this low and we went down and we broke back inside the volume area and we got that retest into this big, massive range supply. Oh, let me grab the range supply. Into this massive range supply. I just knew that we were going to go down, and there were a few things that I liked. So I entered right here, okay? I entered right there with my stop loss above that high. Let me get rid of this because it's so massive. So I entered right there, right here. I put my stop above this high, and then I'm targeting the low, okay? For a 1-to-1. I wasn't targeting this specific low, but hold on. I knew that the moment when I entered right here, because we were back inside that value area, the moment we have that retrace where I entered and we take the low once again, I am moving my stop loss to the high that we put in. So yes, the risk to reward was trash. I knew that I'm risking 1% right here to make one. But the moment we take out this low, so the moment we took out that low here, I move my stop loss towards that high. So now I'm only risking 0.1 to 0.2%. And um I'm still making that 1 plus. And you can think like, okay, maybe we can just add on the trade right here to make it 1% again if you put your stop above that high, but that's really pushing it just because you're so low. Like look at where you're entering in this local range. You're entering right there, that was just too low for me. Normally I would do that if we're in the premium section of the range, but we're like in extreme discount, so that's not really the place to add to your position. But that was kind of my thought process. Plus, as discussed earlier, we had an imbalanced range. We had an imbalanced range And that means that price can easily slice through all this price action towards that low because it likes to fill imbalance ranges, talking about this bigger range where the EQ lines up with the volume area. There's nothing here. It's just a massive gap. So I also said on my Twitter, if we pull up, these were my positions. So for some proof, you can go to my Twitter. There you go. I am already de-risk and have hit some tiny TPs. The risk to reward was trash, but I just knew it was going to go down. We are within a bigger range, so I'm aiming for a 2RR. However, I know the technical target has been hit. So the moment we took this low right here, I knew that's the technical target. And I also knew, just because we could follow that higher time frame market structure, that this could easily turn into a Model 1 accumulation. So as I said on Twitter as well, I was like, if we start surpassing the supply zone and we start breaking market structure back to bullish, that's my sign to get out of this trade, or at least take profit. So I hit some profits right here and at the range low, and then I just let the most run, kind of trailing my stop. Price was hovering around there. I had my stop 2 market structure highs back, and then I hit my TP right here. Yeah, and then let's exit. So I hit my TP right there. Still had a tiny position running, and that position I kept open, but with my stop above that high, kind of trailing my stop loss. And then I totally forgot that we had news. So news grabbed the low, wicked me out, and then hit the main target. But normally I would have closed my position if I knew news was coming, but I wasn't paying close attention to news. So I stopped on this news in profit, realized 2%, more than 2%, and yeah, price went down and hit that target, which is the range low. Feeling that imbalance. Cleaning up the chart, was there also a long? Was there also a long? Because we were still within this bigger range. Let's put the EQ on there, and there was definitely some demand remaining below that range low. Let me see. Is there something? Yeah, there you go. Here. Clean looking 5-minute demand. And boom. Hit it to perfection. What if we extend it now? Is the volume area improved? Yeah, was there a long? Not really for me. If I trade a second tap, so if this is your initial range low and this is the first deviation, you can call this the second tap. I would want to see a structure break back inside the value area, inside these black lines. And you had a 5-minute break here, which ended up working right here. Following 5-minute market structure from the top down, you had that upwards move, that downwards move, and you broke it, and then you put in a higher low for a higher high. The break was just now back inside the value area, and that's something I would like to see. So no, there was no long for me here, and then the rest of the day we just had a slow grind up, and then price is chilling in the upper section of the range again. Probably continuing that higher time frame market structure because I don't really see anything where price could reject from at the moment. So yeah, that was euro, trade around euro. And then there's one trade I would like to go over as well, which is a trade on Solana, and I was pissed that I missed this one. And it's completely my fault, 100% my fault, because I wasn't paying attention to Solana. At least I was not paying attention to my alts, which I should have been, because that's what I always do. But now I was lacking on the alt. So Solana, what happened? As you can see, we actually, this was for the people that remember, this was that long that I got, or that short that I got stopped out to the cent before it had that massive move down. That worked. That was a nice swing short, all the way down towards the lows and these lows that I put on the chart. What happened is we came down towards that range low. Let's put that EQ in. We were in extreme discount, putting our value area. we were deviating the value area low. And it has a very nice volume profile, that nice distribution shape. So trading deviations when the value area looks like this is very nice. And here we got our break back inside, you know? And as I always say, ranges they can rotate, and they don't have to take the extreme points every single time. You can have can have a lot of internal rotations before you decide to have that external liquidity sweep, right? So the moment you see this candle break when you see this candle break back to bullish in this way, a lot of aggressive bullish candles, also back inside that value area, that's your sign to start looking for a long again. And what presented itself here was so beautiful. It's a setup that I would double down on my risk. I just disconnected something. I don't know. Okay, I'm back, guys. I'm sorry. I disconnected my mic. I don't know how I did that. But yeah, we saw these bullish candles. We saw these bullish candles break back inside that value area. So right here, if we just follow 1 hour market structure, you have that low, high, lower low, boom, higher high break. So expectational order flow would be higher low for a higher high, right? Well, what happened? We put in a high, put in the low, and then we created ourselves a new range right here. And you guys know I preach Wyckoff, right? Wyckoff is my baby. It's my bread and butter. What can you see here? Little trick question. What can you see here without me drawing anything on the chart? 3, 2, 1. A Model 1 Wyckoff reaccumulation. There you go. So we knew we were looking for a long, because not only did we have a massive bullish break back inside the value area, yeah, and we're retesting range demand right now, we're also retesting the volume area low to perfection. Look at this. This just looks so clean, guys. It's like the ultimate get acceptance back inside. So zooming in, we had our initial range low and we have our range high. We had our first sweep of the range low at 4:30 in the morning, and then boom, 7:30 in the morning, we had our second sweep, okay? Indicating a Model 1 Wyckoff reaccumulation. Now we just need to wait for market structure to break back bullish, okay? So going on like the 2-minute, I think, yeah, you can call it 2-minute, 2 to 1, you know? We're waiting for this downward structure to break. So basically we're waiting for this high to break right here. And I'm going to give you a little golden nugget, okay? A little golden nugget. If you're trading a Wyckoff Model 1, yeah, where the third tap has a V-shaped recovery, look at this. So we have a massive move down, right? Massive move down that creates that third tap low, followed by this V-shaped recovery. Because if I extend this, this looks like a V. Let's make it red. It's a move down followed by a move up with a V shape, okay? If you have a Model 1 Wyckoff, accumulation or reaccumulation doesn't matter, and you have a V-shaped recovery, price almost always respects the internal trend from the low up. I'm going to say that again. If you have a Wyckoff Model 1 where the third tap has a V-shaped recovery, it almost always respects the internal trend up. And with the internal trend up, I mean this move up, this market structure. Because you have this, it is logical. You have this V shape, where it has that sell to buy effect. Why did it come down all the way? They got an aggressive here, causing the V shape.
So most likely we get a retrace respecting the internal uptrend and we just go higher because it's so aggressive. A model 1 should be aggressive, and then a model 1 with a V shape is crazy. They're my bread and butter setups. These are trades where I would double down on my risk. So how would I have traded this? Well, right here you got the break, okay? I would already start scaling in on this break. And I would put my stop loss 2 to 3 market structure points below the first market structure low from the internal uptrend, just to be safe. And the 2 or 3 depends on how far away it is, right? So right here, this is your internal low. This is your second internal low. This is your third one, following this market structure trend. So just to be safe, I would put it below the second or the third one, just to see what happens. And if you get that rejection, you can move it up. But in this situation, you had such a clean looking demand zone. It's the only demand zone after the break to come back for. This is the only thing that remains here, because below that is just a trail of liquidity, right? This is just liquidity. So I would enter on the break right here, put my stop below this low, see the rejection or see the bounce from this 1 minute demand zone, enter more right here, put my stop below the low. So on average, you would have an entry in the middle of these 2 circles. Stop loss would go here. I would literally, guys, I would double down on my risk. These are trades where I would double down on my risk. And then I would definitely take profit at the range high, which would already be a 24% gain. 24%, guys. That is fucking crazy. Because I would double down on my risk, but also I would keep like 30 to 40% of my position running, because if you look at the higher time frame, we got acceptance back inside the value area. So who's to say that we cannot have a full on rotation back towards the value area high? That could very easily happen. So I would cash out, like if I was up 24 RR, I would cash out like 15 RR and keep the rest running towards this supply zone and that range high and start scaling out there. But this is really this is a bread and butter setup. But really, grab a pen and paper and take notes that if you have a Model 1, okay, if you have a Model 1 like this, where this is your range low, boom, 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 and on that third move down, you have like a V-shaped recovery. So meaning you have this, boom, boom. Let's make that black. You have this V-shaped recovery. Then oftentimes it respects this internal trend from the low up. And let's make that purple. So if you have a little demand zone right here, you can have a really, really tight stop loss. I would also, if the risk to reward is worth it, always enter on the break itself in case it does not come back. But if you have a juicy looking demand zone where it could come back for, you can not put your stop all the way here, but put it below an internal low, right? And it's more safer to put it 2 market structure lows back, or just keep it there. But with a V shape, oftentimes it respects that internal move up, and then you have a massive risk to reward trade. So definitely, that's a golden nugget, guys. That's a golden nugget that I will not post anywhere besides this stream. So if you made it so far, you're blessed. You're blessed. And let me know. Send me a private message if you noted this down, because you know what, I'm gonna give you guys a live example. Because I remember this, because I traded, or I think I missed it, but I wanted to trade it on gold. The exact same thing happened right here. Here, let's go back in time. Boom, boom, boom. Here. It must have been here. Yeah, for sure. Wait, let me double check once more. No. So I was in the wrong place. Okay, here. On gold, here, you had your range. This is a perfect example. You had your range low. This was your initial range low. This was your first sweep. And boom, your second sweep. And look, you have your Model 1. And then you need to wait for this high to break, right? Normally, you would say, well, if this high needs to break, I need to put my stop here and I need to target the range high, which is probably like a 1-to-1. Let me see. Yeah, around a 1-to-1. So that's not worth it. But as you can see here, this is a clear boom, boom, V-shaped recovery, a sell to buy. And in a V-shaped recovery, as you should know, it likes to respect this internal upwards trend. Okay? So zooming in, what happened here, price broke it. Here. Price broke market structure back to bullish. Okay? You're going to check what the internal market structure trend is. So from the low up on like the 2 to 3 to 1 minute, you have like up, down, up, down, up, down, up, down, up, down, up. Okay, so we know by now that price has that main break and it likes to respect the upwards trend and come back for something juicy if there is something juicy. Well, in this situation, if this is our internal low from that move up that we just did, we get rid of this circle. Right here is like kind of your only demand zone. And then price likes to respect the uptrend, so we shouldn't really be taking out this low. And we got a reconfirmation coming back into it this time. Right here. Boom. So you can enter here. You can put your stop here or here. You can technically put it here because you have that reconfirmation. If you didn't have that reconfirmation, you could just enter on the reaction here and then put your stop below the low. But if you have the reconfirmation to wait for it. It's extra confluence, and it's not gonna ruin your risk to reward, because if you have a reconfirmation, you can enter here and actually put your stop here instead of here, right? So it's kind of the same. So let's say you waited this time, put your stop below the low, and then in this time situation you have a Wyckoff Model 1, right? So you kind of target the high. However, you also have a 1 and 2 at the top. So you do need to be aware of a potential distribution, that this Model 1 goes over into like a Model 2 distribution. That can happen. But if we exit replay mode, and we go back here, I think there was actually a news event this time. So it didn't hit its target all the way, right? But it went up all the way towards a 12 RR, which is more than enough for me. And I think you could have cashed out also here, because this was like your good looking supply zone, right? And even up to here, it's a 6 RR. Guys, I'm talking 6%. That is crazy. That passes your phase 1 or phase 2 of an evaluation account, right? And it's just a nice, sexy move up. And again, it's 6%. But as you should know, I like to double down on my risk on these setups. A Model 1 with a V-shaped recovery respecting internal trend. Bread and butter, okay? So that's a little golden nugget. Take notes of that. And that was the trade that I missed. That kind of bothered me, but we live and we move. I think Bitcoin, as we speak, is breaking structure. Yeah. So recapping, finishing off with a Bitcoin recap. I told you guys to watch the low and watch the high. It looks like we just swept the high, kind of creating its own little Model 2 distribution with a nice return to zone right here. Let's zoom in if there was a trade. So you broke market structure right here. Broke that market structure, came back up, and broke internal market structure right here. So that could have for sure been an entry. Putting your stop here. Risk to reward is trash, but then you would just have to aim for way lower, right? You could potentially aim all the way here, because the way we came up is just all liquidity trail. Like, look at this. It's a massive liquidity curve with a lot of sell side liquidity. If we check what the range is doing, it's building some value here. So now we actually broke structure. We actually broke structure, and our entry zone has become a retest zone if we come there. Let's put this distribution in so we know. If we come back up there, you can look for a short. Preferably if we come back up slowly, leaving even more sell side liquidity, you can look to enter again there. But yeah, we're trading this as a range, and we are at the range high, and we hit that more defined range supply that I was talking about yesterday. So who's to say that we cannot have a full on rotation back down, right? Especially because there's a high chance this is going to be a higher time frame range, meaning now we actually have 4-hour market structure. Look at this. Now we actually have a valid uptrend on the 4-hour because we can ignore this wick because this is the higher point. And now we have our consecutive upwards candles. And looking at it on the 4-hour, we're actually forming a pretty nice high. This is that candle formation that I like. So I'm just doing TA on Bitcoin now because I came back from training. But it looks like we have a nice high, even on the candle formation, but that's because we had that model 2, right? That lower time frame model 2 forms that nice candle formation. So I would definitely look for a retest short. I'm gonna put my alerts there. It doesn't even have to come back all the way up there. I'm gonna look for here. Delete that alert. Not delete it, but hide it. And I'm just gonna follow my local structure, putting an alert below this low. And then I would short once you see this uptrend kind of, break. That's your short. There's your stop. Take it all the way down. Okay? I'm going to make some dinner, guys, and I will see you all tomorrow. Peace.